Nifty 50 in India, quick insights for savvy investors. The Nifty 50 is a benchmark index representing the top 50 stocks on the National Stock Exchange of India. It serves as an essential indicator of the Indian economy and market trends. What is the Nifty 50? The Nifty 50 is India's flagship stock market index, managed by the National Stock Exchange (NSE) through its subsidiary, NSE Indices Limited. It tracks the performance of the 50 largest and most liquid companies listed on the NSE. These firms represent about 65% of India's total market capitalization, cutting across 13 core sectors of the economy. How the index works. The Nifty 50 was launched in 1996 but uses November 3, 1995 as its base date with a base value of 1,000. It's a free-float market capitalization-weighted index, which means each stock's influence on the index depends on its market cap adjusted for publicly tradable shares. Sector representation. The Nifty 50 is a diversified snapshot of India's economy. It includes banks and financial services, information technology, energy, automobiles, consumer goods, metals, telecom, and pharmaceuticals. Companies such as HDFC Bank, ICICI Bank, TCS, Infosys, Reliance Industries, ITC, HUL, Bharti Airtel, and Tata Motors are key members. Why the Nifty 50 matters? The index serves several critical purposes. It acts as India's primary market barometer, gauging the overall direction and health of equities. For investors and fund managers, it's the benchmark against which mutual funds and portfolio returns are compared. Inclusion and review process. Membership in the Nifty 50 isn't permanent. The index is reviewed twice a year in March and September by the NSE's Index Maintenance Subcommittee. To qualify, a stock must have traded on the NSE for at least 6 months, rank among the top 100 companies by full market capitalization, and maintain strong liquidity. Interpreting movements. When the Nifty 50 rises, it typically signals optimism, stronger earnings expectations, positive global cues, or foreign capital inflows. A fall suggests caution, profit booking, inflation fears, or outflows by foreign institutional investors. Because the index is capitalization-weighted, movements in the top few stocks can swing the entire benchmark. Common misunderstandings. Many investors confuse the Nifty 50 with the entire Indian market, which is false. It only covers the top 50 out of over 1,600 NSE-listed companies. Another misconception is that the Nifty directly mirrors India's economy. Ways to invest. You can invest in the Nifty 50 through index mutual funds, ETFs such as Nippon India Nifty Bs, or trade Nifty futures and options for tactical exposure or hedging. For long-term wealth building, index funds and ETFs work best. They're low-cost, diversified, and transparent. Key drivers of future performance. The Nifty's direction will depend on several macro variables: corporate earnings growth, RBI's interest rate policy, foreign institutional inflows, crude oil and rupee movements, and global risk sentiment. Want to learn more? Visit our website.